This is CGTN, China Global Television Network.
Hello there, welcome to this edition of Global Business Africa. In the course of the hour, we'll run through the business news stories you need to know about from the continent and beyond. But first, a quick run through the markets for you. So the mining major BHP has announced its intent to leave, essentially end, its listing at the FTSE and only remain listed in Australia. Shares have actually gone up by about 21% so far in 2021. The ongoing crackdown on tech firms in China is still weighing heavily on Naspers and its tech subsidiary Process over in Amsterdam. Naspers shares were over 8% in the red today, taking their year-to-date position down to about 21% in the red. Process has fallen by a similar margin over the year. It was down 3.2% today. We'll also be speaking to Ronak Gardia, BFG Hermes, in the next 10 minutes about equities first half. But first, these are your headlines. Nigeria finally gets new oil laws after 2 decades of debate. Kenya's second largest bank by assets reported doubling of net earnings. And the Delta variant of COVID is hampering the pace of the US economic recovery. We start the program tonight in Nigeria, where President Muhammadu Buhari has signed into law a long-awaited piece of legislation designed to overhaul the oil and gas industry in Africa's biggest crude producer. A harmonized version of the Petroleum Industry Bill, or the PIB as it's more commonly known, wrapped up its passage through both houses of parliament in the middle of July, nearly 2 decades after it was first introduced. The law aims to create a much clearer framework for operations and also simplify taxes and royalties for oil companies working in Africa's top oil producer. But it did add provisions, including one that could give the Dangote Group an effective monopoly on fuel, and that has launched last-minute battles in Africa's largest oil exporter. At the moment, 23 companies have refining licenses, which according to the Department of Petroleum Resources, most of them, however, process less than 12,000 barrels of crude a day. The Dangote refinery, which is under construction in Lagos by the billionaire Aliko Dangote, will have the capacity to handle some 650,000 barrels of crude every day. So let's examine this development in a bit more detail. Dauda Garuba is a natural resource expert. He joins us now live from Abuja. Dauda, thank you very much for your time this evening. Just as a matter of concern, did you think you'd ever see this point with the PIB after spending 20 years in legislation? Did you think this day would finally come? Dauda, can you hear me? If you can hear me clearly, did you ever think this? Can you hear me clearly? Hello?
Yes, I'm hearing now.
Okay, perfect. So did you ever think this day would come? The PIB has languished in legislative limbo for over 20 years, and now finally it's become law.
Yes, that is true. That Nigerians are happy that after 13 years of starting this journey, we are gradually putting it behind us. But what I've always argued is that it's one thing to make a law, it's another thing to implement or enforce that particular law. Given that this country started on a note of we'll be working on the 1969 law that have been passed left, right, and center over the years or decades. And now I think we are ready to start to do business, at least in a form that is maybe going to be commensurate with contemporary development in the oil and gas sector.
Okay,
so to this extent, most Nigerians.
So walk us through the key changes here then, because the 1969 law was written for a very different period of time. How do taxes and royalties on oil and gas firms compare in the PIB now compared to the 1969 law?
Yeah, actually, the fiscal regimes or fiscal arrangement in the laws we've had over the years have been maybe from time to time modified since 1969, 1999, 2003, 2019, upward, and there have been from time to time an adjustment to the rules. But I think what has come out very clearly with respect to, for instance, the royalty, is the fact that unlike a situation where royalty had staggered from 2.5% to up to 18 or 20%, depending on the terrain, whether it is onshore, whether it's shallow waters or offshore. The current situation tend to put an end to some of those staggered arrangement. And one of the key focus, especially with respect to royalty, is that you will going to be having 15% for onshore areas and 12.5% for shallow waters and 7.5% for deep offshore and frontier bases. And for the gas, it's going to be between 2.5 and 5% for natural gas. And all arrangements are largely in tune with either the nature of the terrain or sometimes the quantum of what is produced.
Okay, so there are concerns that we're hearing about from Nigeria that this might give Aliko Dangote a dominant position in the domestic fuel market, given the size of the refinery he's building in Lagos. That can handle over 600,000 barrels of crude a day. Walk us through those concerns. Are they valid?
Actually, this is an area that has attracted public debate, especially when the bill was passed by the House of Representatives and the Nigerian Senate. What actually was the key issue was that Nigerians couldn't understand why license was given only to businesses that have the capacity to refine products locally. And the argument was that if they were already having the capacity to refine product locally, what business would they be having with importation? And this seems to have raged on for a long time, and including those who often call the independent marketers now ganging up to push for the reversal of such this thing. The bill was just signed yesterday into law, and until we see the details, we will know whether those aspects of it has been taken care of. But largely speaking, the arrangement is that there was this belief that anything that has to do with energy is largely related to national security, and that the experiences of the country over the years where companies or local companies were just picking up licensing and importing fuel products without regard to the quality of the fuel that is coming into the country, or maybe who were largely involved in graft. The arrangement was actually designed by the National Assembly to ensure that somebody will have to carry the blame when there are answer for the blame when there are need for that. But right. Like I said, a lot of Nigerians protested against this.
All right, unfortunately, it seemed to be having problems with that particular link over to Abuja. That, of course, was Dauda Garuba, is a natural resource governance expert, joining us there from the federal capital of the country. Now, moving along fairly swiftly away from the business of oil extraction, let's head over to Zambia, where opposition supporters have been celebrating after Hakainde Hichilema beat the incumbent president, Edgar Lungu, in the presidential election. Mr. Lungu has already conceded defeat, but as Wilkison Yabona reports, the incoming president has a massive task ahead as Zambia continues to battle the COVID-19 pandemic and the economic challenges it's brought up.
After 6 attempts at the presidency, Hakainde Hichilema has finally clinched it.
My fellow citizens of Zambia, it is with great honor, humility, gratitude that I stand before you today to say change is here.
And the celebrations among his supporters capture his moment of victory and expectations.
The new government coming in place, we can at least see that they'll find jobs for us to do. But then with the old regime, which was based on cadres just getting works and opportunities, this is the change that we needed. That's why people are happy. Disgruntled youths, that's what they called us. And now we show them that we're not disgruntled. We're actually the youths that make the change. We control our democracy. We've showed them.
Hichilema, who is an accountant by profession, beat incumbent Edgar Lungu by garnering over 2.8 million votes. Lungu managed to get just over 1.8 million ballots. Election monitors say Zambians have done it again by exercising their democratic rights peacefully.
This is a very momentous occasion for Zambia. We have had a number of elections in this country and a number of peaceful transitions. So this is yet another milestone for Zambia in that we have been able to hold successful elections, and we are obviously going to see a very peaceful transition. So that's a very big plus for us as a country, and we all deserve to celebrate this.
Outgoing President Edgar Lungu, in a live broadcast on state radio and TV, conceded defeat, promising a peaceful transfer of power. He had earlier indicated his displeasure with the outcome. He said the polls were marred by violence and that his party officials were chased away from polling centers. As celebrations die down and Hichilema gets down to work, a huge task lies ahead of him. Zambia is grappling with high unemployment among young people. The COVID-19 pandemic has also dealt a blow to livelihoods. This, together with falling copper prices on the international market, have made the going tough for the Southern African nation. These are some of the issues that may have contributed to the outcome of this election, and Hichilema must now take them head on. Wilkisanyabwa, CGTN.
All right, then, so let's focus on a narrow subset of some of the things that Mr. Hichilema will have to deal with, specifically Zambia's debt restructuring. Zambia's currency and its Eurobonds both rallied following Hakainde Hichilema's win in the country's August 12th presidential and parliamentary elections. Zambia's currency, that's the kwacha, had lost over 50% of its value in 2020 as the COVID-19 pandemic spread worldwide. It then defaulted later that year on servicing over $3 billion worth of Eurobonds due in 2022, 2024 and 2027. But since the start of the quarter, the kwacha has gained around 16% against the American dollar. That's the tail end of that particular graph there. Now, the price of the Eurobond due in 2024 has risen from October's lows of around 42 cents on the dollar to nearly 76 cents today. Before any wider restructuring deal can be agreed to, however, Zambia does need to secure an IMF program. Some hours ago, I did speak to Mark Boland. He's a senior credit research analyst at Red Intelligence. I started our conversation by asking him what are the key challenges that lie ahead for Africa's second largest copper exporter.
The election turned out to be freer and fairer than expected, and the opposition now, which now got voted into government, did better in the also in the government heartlands, the kind of Bemba-speaking areas in northern Zambia. So there's a very clear outcome of that election.
But at the same time, this is it might be arguably a bit premature to celebrate because, we still have to deal with questions around debt transparency. How much is owed to China? How much, on what terms is that borrowed? How do we arrive at equal debt treatment with this new administration vis-a-vis the old one? So there's still quite a few things left to do.
Yes, you're right. There's still a lot of outstanding issues. The incoming president, Hakainde Hichilema, has said, clearly stated that he's prepared. He wants to negotiate with the bondholders and the other creditors, and that's what the rally in the bonds is. The bondholders are expecting there to be a more open negotiation than actually moving forward on this, but there's still a long way to go. The immediate priorities will be for Zambia to secure an IMF program, and then sort of get the creditor committee formed and start the negotiations. And as you probably know, a sort of sovereign debt restructuring is on average takes about 8 years, if I'm not mistaken. So it's going to be a long process.
Okay, let's move away from Zambia for the time being, because another interesting development in the Eurobond market has been with Ethiopia. Yields on their notes due in 2024 have gone all the way up to over 10%. Walk us through the market sentiment around that.
Yeah, so there was a steady climb in the bond yield on the Ethiopia 2024 over the past few months, and that was think, highly connected to events on the ground where the winds of fortune in the war seems to have turned against the government. I mean, now there's the quite crucial Addis Ababa Djibouti railway has been cut off for about a week or so, and I think this is pricing into the Eurobonds. They realize it will be more difficult for the government to exclude the Eurobond from any debt restructuring, which is clearly what they had signaled. So what we heard about 2 weeks ago was the finance minister who confirmed that a credit committee would be formed later this month. It's a committee of creditors to kind of one part in the negotiations with the government. And they also confirmed that they had concluded an IMF review the week before, so that would be in late July.
So once the credit committee is formed, what sort of options are on the table? Might we be expecting a deferral of payments, perhaps over specific windows, 6 months, 9 months, a year?
I think, I mean, the IMF has clearly signaled in this sort of common framework that they want sort of deeper restructurings. They don't want to have this process where you have just sort of quite a sort of easy or quite a short deferral, and then, you know, a couple of years down the road, you have to do the same process again. But then they kind of changed tack earlier this year and also kind of opened up the framework for kind of more kind of market-friendly debt restructurings. And I think that was partly with reference to Ethiopia, which applied for the common framework process in January. And I think they were hoping for kind of a deferment where they could exclude the Eurobond and get a deferment of mainly the Chinese loans. But since then, essentially the war fortunes have changed, as I mentioned. And what we hear is, you know, the Chinese are putting down the foot and, you know, really have been one of the factors. They haven't signed off on this creditor committee. They have in other cases preferred to do kind of debt restructuring on a bilateral basis. So, I mean, this is just part of the process of kind of bringing in China as the biggest bilateral creditor into the sovereign debt restructuring framework that's normally conducted in the Paris Club in Paris.
Indeed. So one last question for you. Looking at the price chart for the Ethiopian, for the 2024 note, because it's gone from around 102 cents to the dollar in September last year. Now we're trading around around 89 cents to the dollar. I mean, that's roughly what, a 13% collapse relatively quickly. How established is a concern that among Eurobond holders, rather, that they might not get their money back?
My impression from talking to some of these bondholders is that they still expect a creditor-friendly restructuring, just a kind of extension of the debt repo of the maturity of the profile, and not really a haircut on the debt. But I think that is an optimistic assessment, just because, you know, the political challenges on the ground and the conflict with Tigray, looked to be almost over earlier this year, but then the Tigrayan separatist forces have come back and now, have, expanding and almost cut off the Addis Ababa Djibouti link, which is more or less a lifeline for the government. And the FX reserves of Ethiopia, that low level of FX reserves has always been a kind of weak point, and that has been, they have been eroded earlier during this year. They're going to get a bit of a boost from the SDR allocations. But then, yes, we don't know if what this IMF review is going to come up with, if it's going to be more loans dispersed to the government, but it's probably quite likely that it might require a more deeper debt restructuring than the bondholders are actually anticipating.
All right, then our company news wrap actually picks up with a story related to Ethiopia. The South African telecommunications operator MTN says it will not resubmit a bid for a license in Ethiopia. Earlier this year, the company offered $600 million to the Ethiopian government for that license, but officials in Ethiopia rejected the offer. They said it was just too low. The first license went to the Safaricom-led consortium, which put up a bid of $850 million to get into Ethiopia's telecommunications industry. Bolt Kenya has announced plans to help drivers own cars through a vehicle financing scheme with leasing companies. The digital taxi hailing platform says it's in talks with a range of leasing firms to import the cars and then enter into a deal with the drivers to pay an agreed amount either on a daily or a weekly basis. The company says that will help compensate the firm when a driver fails to pay the installment as agreed. Emirates, one of the largest carriers in the world, has announced a new agreement with a regional carrier, Airlink, as part of its ongoing expansion into South Africa. Emirates says that deal will give travellers to and from South Africa access to more than 40 domestic and regional destinations in the continent. Emirates resumed its flight to South Africa at the start of July. And the UK-based defence contractor Ultra Electronics has accepted a $3.6 billion takeover offer from the US-owned rival Cobham Group. Dorset-based Cobham is owned by the US private equity firm Advent. It says the combined firm would play a mission-critical role in defence and security for the Five Eyes network of intelligence allies. That's the United Kingdom, the US, Australia, Canada and New Zealand. That's a run through your company headlines. You're watching Global Business Africa. Plenty more coming up, including this. East Africa's second largest bank by assets reports a more than doubling of profits. And poultry firms in Ghana are taking a hit from an outbreak of bird flu.
The world economy as we know it is about to change. Global business reports highlight emerging markets, developing countries, and dynamic sectors worldwide. We feature top analysts and newsmakers to provide perspectives on every facet of business. From an on-the-ground perspective, we provide you with balanced and objective assessments. Fast, sharp, and insightful. Global Business, only on CGTN.
Africa is the nexus of enterprise, and Global Business will tell you why it matters.
From the mega investment projects to multi-billion-dollar mergers and acquisitions.
Africa today collects, just in terms of revenues from taxes alone, $545 billion a year. If you take 10% of that and you devote it to the energy sector, problem solved.
All this on Global Business, weekdays at this time on CGTN.
Welcome back to the program. Kenya's second largest bank by assets, Equity Group, has posted some rather impressive financial results for the first half of the year. The bank's 6-month pre-tax profits nearly doubled to $217 million from the $109.6 reported in the first half of 2020. Now, sharp growth in Equity Group's interest income and their non-interest income led to the high profits that we're seeing here at the end of the 6-month window. Total interest income, that's the bank's main source of revenue, was up to $390 million in the half year that ended in June. That's 30% more compared to the same period a year ago. Its non-interest income from fees and commissions on loans, foreign exchange, trading income, dividend income and so on, that went up by 44% to $190 million compared to the same period in 2020. The bank's total operating expenses only went up by 3.8% at the end of the half year ending in June. All right, then, clearly the market absolutely loved the results that they saw today. But where does this leave the bank moving into the second half of the year? Let's explore that. Ronak Gardia handles bank coverage across sub-Saharan Africa at EFG Hermes. He joins us now live on the program from London. Ronak, good to see you on the program. So what were your initial impressions of the numbers that James Mwangi and his team presented today?
Good evening, Ramah. Thanks for having me. Yes, looking at the numbers today, at the first glance, they seem pretty impressive. As you mentioned, on a year-on-year basis, earnings almost doubled. That's partly driven by the low base effect, because as you remember, the second quarter of last year was pretty poor because the bank accrued pretty substantial loan loss provisions on the outbreak of COVID. Earnings was also boosted by inorganically because of the acquisition the bank made in DRC. Having said that, even if you exclude those factors, on a pre-provisioning basis, the bank's profit before tax increased by almost 34%, which is quite impressive given the operating environment that them and every other East African banks are operating under.
And so the bank also did manage to trim its NPL ratio. It's down to, well, just under 11%. The industry average is closer to 14%, looking at the central bank data that we have by the end of June. That's lower than industry average, but should we expect that number to be sticky?
You're right. The NPL ratio did decline on a quarter-on-quarter basis to 10.7%. And I think from an investor's perspective, that was important because it had consistently been increasing for the past 3 or 4 quarters prior to that. Looking forward, if you look at the guidance that management provided today, they're expecting the NPL ratio to decline to around 7 to 10% by the end of the year. So, they're expecting the NPL ratio to continue to improve. Will it continue to improve? I think there might be some challenges. First and foremost, as you know, the COVID crisis is far from over. Regionally, many economies across the region continue to contain the pandemic by imposing intermittent lockdowns. These lockdowns are bound to have a negative impact on growth, GDP. And then on top of that, for Kenya in particular, we're also about to enter an election cycle. And historically, as you may know, that has resulted in delayed government payments, which results in a slowdown in the economy. So the macro environment remains challenging. And I think as a result of that, the bank's asset quality and generally the sector's asset quality will continue to remain under pressure for the next 12, 18 months. In our estimates, we continue to estimate an NPL ratio of around 10% and cost of risk of around 2.5% for 2021, which is at the upper end of management guidance.
Okay, so the bank CEO, James Mwangi, was speaking about the DRC and Tanzania, but a lot more bullish on the DRC, describing it as a key driver of future growth of the business. And yes, the DRC has impressive numbers in some respects, population size, mineral deposits and so on and so forth, but it also has many problems on the other end to balance that off as well. Do you agree with that statement, given the fact that the bulk of their business is still, really based in Kenya?
Yeah, I agree. I partially agree on that. Of the 2 countries that he identified as that will be the key growth drivers for the group, DRC and Tanzania. DRC, I think, makes a lot of sense. DRC over the last 4 or 5 years, especially last year, especially after the acquisition last year, has become a big part of the overall group. It now contributes around 30% of overall group assets. So the growth of DRC will go to a large extent in terms of determining the overall growth for the group. In terms of the opportunities, if you look at DRC over the last 4 or 5 years, from a liabilities perspective, it has grown quite substantially, especially after they changed the mining laws, I think in 2016, 2017. So from a liabilities perspective, the growth has been very, very strong and continues to remain strong. We haven't seen that translate into strong asset growth. But again, speaking to management, earlier this year, it seemed they're quite bullish that growth on the asset side will start to come through as they continue to roll out the model, which has been very successful in Kenya and in some of the other countries as they continue to roll out that model into DRC.
Speaking of the model, though, because I'm going to start thinking of Equity now as essentially as a sort of a tech company in some respects, because they're trying to essentially make themselves able to reach as many people as possible with the lowest possible physical footprint. But is that the right way to think about Equity, especially as it expands across Eastern Africa? Is that model as scalable as we think it is, or might it run into problems in the DRC and Tanzania? Because in terms of tech adoption, Kenya tends to be a bit of an outlier.
Agree. Kenya is a bit of an outlier, and that's largely because of the success of the dominant telco company. Outside of Kenya, look, I think initially the growth driver is not going to be from the tech perspective. What they're really trying to implement is the agency banking model, which was also quite successful in Kenya if you go back to around 2012, 2013. So I think in the short term, what you're going to see is the growth engine of the group in DRC, in Tanzania, also in Uganda and Rwanda as well, will be the traditional analog model, as per se, they will have to continue to expand their branch network and then complement that with an agency network. And then as smartphone penetration continues to increase, as the level of sophistication of bank customers in those countries continues to increase, then the tech adoption will come, like we've seen in Kenya.
Okay, so one last question for you, Ronak. 2020 obviously was a pretty grim year, and that makes, as you pointed out earlier, it makes 20 and 21 numbers look pretty rosy in comparison. Are you going to be sticking to your current price target on the bank, or will that require a bit of revision?
Well, firstly, I must point out that I'm not as bullish as management. If you look at the guidance this year, they're guiding towards an ROE of around 25 to 30%. My ROE guidance, which I'm still sticking to despite the numbers this morning, is around 22%. And that's because, as I mentioned earlier, I'm a bit conservative because of the continued impact of COVID, the elections in Kenya. Having said that, an ROE of 22% in the current environment, I think is quite impressive. Also within that, we are seeing a clear direction of how the ROE goes from around the 20-22% range right now to around the 25% plus range in the next 2 to 3 years, especially as DRC, the profitability of DRC continues to improve. So, on that basis, given that the ROE continues to improve, even after the bullish run that the stock has had over the last 3-4 months, it's still trading at a relatively inexpensive price to book of around 1.2 times. Historically, if you go back to 2016 pre-rate caps, when the bank was achieving similar ROEs of 25-30%, it used to trade at a price to book of around 2 to 2.5 times. So on that basis, still continues to look quite cheap.
All right, we'll leave it there for the time being. Ronak Gadhia, good to have you on the program as always. Much appreciated. Ronak Gadhia there from AFG Hermes, joining us from London. Now, let's dive into the world of aviation. Air passenger traffic across the continent fell by 2/3 last year as the global air transport industry collectively witnessed the steepest fall in traffic in 70 years. Industry losses topped $126 billion for the year as disruption caused by the pandemic impacted demand and the number of aircraft operated by airlines. With the details, CGTN's Daniel Arap-Moy.
The 2021 World Air Transport Statistics highlights the impact COVID-19 had on the air industry. Air passenger capacity was impacted by the grounding of aircraft fleets at the start of the crisis. According to IATA, the decline in air passenger transport in 2020 was the largest recorded since 1950. In Africa, industry-wide revenue passenger kilometers dropped by 65.9% year-on-year.
The African aviation industry has lost so much, in terms of revenue. A lot of people have lost their jobs. And what is going on at the moment is that travel is still very much suppressed in terms of demand, of vaccination and all the protocols around testing are still hampering travel confidence, and the demand is still very, very low.
Only 1.8 billion passengers traveled by air in 2020, representing a 60.2% decline from the 4.5 billion that flew in 2019. African airlines carried 34.3 million passengers during the year, representing 65.7% fall from the 95 million carried in 2019.
Loss making on the African continent is really a historical thing, and it is continuing. I think the crisis has simply exacerbated an existing problem, but our airlines need to change themselves, and we need to see new business models. We need to see airlines becoming more agile and more flexible, and perhaps even for our airlines to now embrace the importance of cargo operations, which have really been a saving grace.
The grim numbers form part of the highlights of the International Air Transport Association's World Air Transport Statistics report released in Montreal, Canada recently. Mango Airlines, a big South African domestic airline, is currently entering a voluntary business rescue. Comair, another South African domestic air, went into its own business rescue, which is a form of bankruptcy protection. Air Mauritius has also gone through its own restructuring and is now looking at cutting hundreds of jobs. In East Africa, Kenya Airways recorded a historical loss in the corporate history of the aviation industry. Uganda Airlines also faced the same issues with mounting debt and a huge loss as a result of the effects of the pandemic. Daniel Arap-Moy, CGTN, Nairobi, Kenya.
Poultry farms in Ghana are taking a hit from a bird flu outbreak. More than 10,000 birds have died from the disease, which has been spreading across West Africa since March. CGTN's Nabil Ahmed Rufai reports from Accra.
Emmanuel Abaja started this poultry farm in Accra in December. It was after he lost his job within the tourism industry due to the COVID-19 pandemic. Now his business is threatened with an epidemic, the outbreak of bird flu.
We woke up in the morning and we saw that some were dead. Then we realized that some are giving out like a greenish droppings. And after careful watching at them, we saw that some start shaking their heads, and then they start look as if they are struggling. Then within short 2-3 minutes, they are dead.
Ghana recorded the outbreak of the bird flu in July in 3 out of 16 regions in the country. The Ministry of Agriculture says more than 6,000 birds have died naturally, while nearly 5,000 have been killed to stop the spread of the disease. Abaja says he has lost nearly 800 birds.
They just started laying, so I was just going to depend on the eggs to pay my debts, and now all of them are gone. So it's really a big blow for me.
Veterinary officers say the outbreak of the bird flu could affect nearly 600,000 poultry farms in Ghana. Another poultry farmer, Idrisu Amadu, says he has lost 3,500 birds due to the outbreak of the disease.
Everything gone. I'll start from scratch. You understand? That's been the whole problem.
The bird flu has been spreading in West Africa since March. Ghana has banned the import of poultry from Nigeria and Togo to prevent further spread of the disease. Poultry farmers here say the outbreak of the bird flu comes at the worst possible time. They were already struggling to buy feed for the birds due to a hike in prices. The government says it will give incentives to farmers affected by the disease.
We are appealing to farmers that they should be cautious, they should report early, they should allow us to come and do the proper thing, depopulate and disinfect their farms so that we can stop the spread.
Emmanuel Abaja says he is now counting his losses. It will take him a couple of months to bounce back when the bird flu outbreak is declared over. Nabil Ahmed Rufai, CGTN, Accra, Ghana.
Authorities in Egypt have signed a deal with the UAE to set up a joint company that can manufacture vehicles that can run on either conventional petrol or LPG. Now, that agreement will boost Cairo's plans to make use of the country's plentiful gas supplies and to reduce its reliance on costly oil imports. CGTN's Yasser Kim has the details from Cairo.
EM Holdings, a joint venture between Egypt's Ministry of Military Production and the United Arab Emirates M Glory Company, has created a prototype of the EM biofuel pickup truck that will run on both natural gas and gasoline. The Cairo-based Emirati company's director says they've been working on the design and components for a year.
It will consist of up to 60% local components. The imported parts will be the engine from Mitsubishi and the transmission. The rest is locally produced. Wiring, harness, AC, brakes, radiator, the body, windows, seats will all be locally manufactured. Safety comes first. It is the first pickup in Egypt to have the European Safety Certificate, EMAC, the first local pickup with ABS and ABD safety systems. It is biofuel, meaning it can operate on natural gas and fuel, and so it will save 60% of expenses for the owner and will carry a bigger volume and more options than competitors in the same segment.
The pickup truck has been successfully tested in Luxembourg and also gone through 30,000 kilometers of road testing in Egypt. The agreement will see 12,000 vehicles being produced annually at Egypt's military production factory starting 2022.
This production is not just for Egypt, but will also facilitate exports. Africa is our target, and we already have purchase orders for our truck. This is the main target by M Glory. When we said we want to invest outside the Emirates, we chose Egypt because it is a gateway to Africa.
الحاجة التانية مصر معاها اتفاقات دولية كبيرة جدا.
Officials say EM Holding is not only being established for this biofuel pickup truck, but there are also plans for the manufacture of other models, including the first electric pickup truck in the region. Yasser Hakim for CGTN, Cairo.
You're watching Global Business Africa. Time for a short break. Here's what's coming up. The Delta variant of COVID-19 and a surge in infections is slowing down the pace of a U.S. economic recovery. And local train services in Mumbai resume, but only if you're fully vaccinated. The details coming up next.
Business in Africa is at a crossroads. We celebrate those who are adopting and thriving despite the challenges, from grassroots to big businesses. Global Business takes you along for the ride as we track the making of a giant.
Only on CGTN.
How will your world change today? What happens here? What happens there? Or what you make happen for yourself? If it matters to you, it matters to us too. Your stories are the stories that need to be told. Africa Live. Find your voice.
Welcome back to the program. You're watching Global Business Africa. These are some of the stories making your headlines at this hour. Uganda says it will take in some 2,000 Afghan refugees fleeing the crisis in their country. Refugees Minister Esther Anyakun says that President Yoweri Museveni has agreed to take in the refugees at the request of the United States. This follows the weekend's takeover by the Taliban of the country and the collapse of federal authorities. The first group of around 500 or so Afghan nationals are expected to land at the Entebbe International Airport. Elsewhere in the region, Ethiopian Prime Minister Abiy Ahmed is in neighboring Eritrea. He's meeting the Eritrean President Isaias Afwerki. On the agenda, the war in Tigray. The Horn of Africa leaders also set to hold talks with the U.S. envoy Jeffrey Feltman. According to the U.S. State Department, Feltman is expected to present a proposal by the U.S. for peace, stability and prosperity in the region. The Libyan Political Dialogue Forum, which brings together actors from all sides of the country's political divide, has failed to reach an agreement on the constitutional foundation for the planned December elections. That's despite efforts by the UN support mission in Libya to get all sides to agree on a way forward. The rival bodies were represented at a recent virtual meeting focused on setting the criteria for candidates who'd run for parliament or the presidency, but they could not reach an agreement. And finally, officials in Niger have confirmed that about 37 people have been killed in a suspected Islamist attack in the western Tillaberi region. Reports say that 13 of the dead were children. The Tillaberi region lies at the epicenter of Islamist violence in the Sahel. The area is concentrated in the zone where Niger meets Mali and Burkina Faso. Multiple jihadist groups do operate in that area, some linked to Al-Qaeda, others to the Islamic State. That's a run through your headlines. Now then, let's run off to the United States. The Delta variant of the coronavirus is hampering the pace of the U.S. economic recovery, as seen from growing signs like event cancellation and rather curious, conservative consumer behavior. Some events, for example, like the New York Auto Show, have been cancelled due to a surge in infections in some parts of the country. In the meantime, companies like Google, Amazon, the finance management firm BlackRock, they've all cancelled return to office plans fairly recently. Economists and policymakers are closely watching a mix of anecdotal and high-frequency data for any signs of this negative impact dragging out much longer. Data from China's National Statistics Bureau shows that the country's economy is maintaining a rather steady recovery from the pandemic. Fixed asset investment was up 10.3% year-on-year to more than $4.6 trillion in the first 7 months of the year. Manufacturing investment, which is a main driver of the recovery, was up 17% over the same period, with an average growth of about 3.1% on a two-year basis. Tightening house purchase policies did lead to a fall in the growth rate of commercial housing prices on a monthly and yearly basis in 70 large and medium-sized cities in China. Malls in Mumbai have reopened and local trains are running once again. But only those citizens who've gotten both their shots of the COVID-19 vaccine can use them. Radhika Bajaj reports from the western Indian city of Mumbai.
Before COVID-19 stopped them in their tracks in March 2020, Mumbai's local trains ferried an estimated 7 million passengers every single day, leaving no scope for any social distancing. Services for the general public were resumed with restrictions in early 2021, only to be shut down due to a fierce second wave of infections. The local government's move now to allow fully vaccinated residents to use them again comes as a big reprieve for commuters. But those with only one dose are unhappy they've been left out.
Before the train started, we were having to use taxis that turned out to be expensive. It's been very inconvenient to get to work.
Trains are essential for us. Most of us don't have the option to drive long distances. The train is very convenient.
Residents have to wait 2 weeks after their second shot before they can be issued monthly and quarterly passes via online and offline channels. Till Sunday, about 130,000 such passes had been issued by the authorities. In Mumbai and its surrounding areas, just about 3.1 million people have received both doses of the COVID-19 vaccine. That's just about 18% of the total 17 million targeted citizens. With inoculation drives being stopped every now and then due to vaccine shortages, it's safe to say that it will take a while before more commuters can come on board Mumbai's suburban train network. The low volume of fully vaccinated citizens is also a concern for mall operators. They're asking the government to allow single-dose vaccinated citizens to be given access to malls too. And while they're pleased that the under 18 years group, which isn't being vaccinated in India yet, has been permitted in malls, they still feel it isn't enough to pull retailers out of the devastating economic impact they've been facing.
The Maharashtra has that record of having more cases. Look at the second wave, the first wave also. So I think it's taking a little more precaution. Having said that, I don't think it's really a great news for the malls because the footfall will just be reduced. What happens is the catchment what we have, the people who come to the mall are basically between 10 years to 55 years. And if you look at this 18 to 45 been taken out, they're not even entitled to take the second dose.
With a recovery rate of 97% and no containment zones as of August 14th, the city that once had staggering COVID figures seems ready to get on with business. But with the Delta Plus variant lurking around, city officials say they'd rather play safe than be sorry. Radhika Bajaj, CGTN, Mumbai, India.
A Kenyan-Swedish company is converting traditional noisy carbon dioxide emitting safari vehicles, usually Toyota Land Cruisers of some sort, into relatively silent, 100% solar-powered transporters. Embo River Camp, its luxurious eco-lodge in Amara, is one of the beneficiaries of this new product. They procured 3 of these vans, which they use on game drives. It's a first in the carbon-intensive business of wildlife tourism. CGTN's Alexander Majala has that story on What's Hot tonight.
In Kenya's Masai Mara National Reserve, a Toyota 4x4 Land Cruiser glides silently past the herd of grazing elephants, then past the pride of lions lying in the grass. The animals are completely unperturbed by the proximity of the vehicle because its diesel engine has been replaced by an electric one. The new engine eliminates the rumbling noise and, just as importantly, reduces the emission of diesel fumes.
If you drive here silently, you will of course get much closer to animals, especially the elephants that we are in now, because there's no vibrations on the ground and there's no the fume that will get a smell from like other cars. So with this, you can get all those things. They are not disturbed in any way.
Mukenya's vehicle was converted by Opibus, a Nairobi-based Kenyan-Swedish company founded in 2017. It is for now the only company in Kenya that converts diesel and petrol-driven safari off-road vehicles into electric ones. Off-road vehicles are a common sight in Masai Mara, renowned for their annual wildebeest migration. But these are the first in the usually carbon-heavy business of safari tours to be entirely powered by electric batteries.
It's like a different car that I'm driving. It takes me like 1 week to not be confused, but because sometimes you just want to change the gears every time. But for this one, it's like it's automatic. You just drive it very smoothly, no noise, no fumes. It's good for the clients, and also it's good for the environment.
The company has so far converted 10 vehicles used in Kenyan game parks, including 3 in the Masai Mara. OPBus has even more plans to change the transportation landscape in the country.
What we envisioned by 2030 is to have all matatus on the road to be electric, as well as utility vehicles. And what we have at the moment also are motorbikes, which are designed, frame and everything here in-house. And we aim to have more boda riders using electric vehicles, motorbike.
OPBus uses 35% locally made materials with the aim of eventually only using local materials. As well as being more environmentally friendly than diesel engines, the electric motors cut operating costs by half. At the Embo River camp, operations run solely on solar power. The camp says that with all their eco-operations in place, the company saves around $150,000 a year on operational costs. Alexandria Majala for CGTN.
Let's get back into the business of dirty fossil fuels, shall we? A quick run through commodity prices. Brent crude, it does continue to decline a bit marginally today, down about 0.25% at 16.21 GMT. It's gone as low as 68.85 in today's session. Royal Dutch Shell and Nigeria's government apparently then talks about the sale of the firm's onshore assets, but there's no firm timeline on when such an exit would happen or to whom for that matter. The last 2 settlements that Shell has made in the country are all related to oil spills and environmental damage done from its onshore facilities, pipelines especially, and these often have dragged on in courts inside and outside Nigeria, in some cases for decades. Here's what's coming up next. The COVID-19 pandemic has spurred the business of video games across the continent. We'll take a look at that when we return.
Africa is a continent of diversity, with varied climate and enchanting geography, and a people so distinct, but with a shared enduring spirit. We are at the heart of the continent to bring you the untold stories.
Let's have a look.
We celebrate Africa as it shapes its own destiny.
Tunis, Cairo,
Syria,
Juba,
Johannesburg,
Ethiopia, Tanzania.
Africa Live. Find your voice.
The greatest journeys, the greatest sights, the greatest adventures.
Here in Qanater, this weir allows the locals to walk on water.
We're far more than just TV news. We're your passport to the wonders of Africa.
To bring you stories of struggle, survival, and hope.
So let's explore. CGTN. See the difference.
You don't find the stories of North Africa by sitting on the sidelines. No one else will take you where we can in North Africa. And no one else will show you what it's all about. CGTN, see the difference.
Welcome back. Video gaming is a rapidly growing market right across Africa. The continent as a whole saw nearly 50% growth in the first quarter of 2020 as many countries went into pandemic-related lockdowns. Since then, the African market has been booming. It's expected to grow by at least 12% in the next 5 months. And that presents an interesting revenue opportunity for mobile operators and related tech companies, as CGTN's Julie Shire now reports.
Rahul Polton was an avid gamer before the world was forced into lockdown by the coronavirus pandemic. Since then, he's invested more time and money on his favorite hobby.
It depends on when I feel like gaming, but an average session is at least an hour. Yeah, it can go up to maybe 6, 7, 8, 9 hours. It all depends. Also the company that you have, like you make friends online and that company really makes you want to come online and play with them, talk to them, socialize.
The trend's been replicated across the continent over the last 18 months. In the first quarter of 2020, Africa's gaming community soared by 46% to 1.75 billion people.
Mobile gaming is probably the most convenient and easiest, cheapest way to game, but you're very locked in. There's not a lot of opportunities and options of what you can play, and the graphic quality is really low. I do PC gaming, which is the most advanced and I would say the most luxurious. But most people that start at console gaming, your standard Xbox One, PS4.
Extra time spent in front of a PC may have dampened the social lives of Polton and other gamers, but it has been good for mobile operators and other technology companies.
We're seeing the technology vendors in particular getting more and more involved in gaming in South Africa. So the likes of Dell, for example, with Alienware sponsoring esports teams is becoming a big element of what they do. And then you get telcos like Telkom, for example, sponsoring gaming events and so on. So it's a combination of telcos, technology, hardware vendors, and the like.
The take-up of gaming on the continent was slow before the pandemic, but it's expected to continue growing by around 12% over the next 5 years.
The gaming companies themselves, like PUBG Mobile, for example, just announced a massive content creator program. And the opportunities that it gives to gamers in this country, you start seeing the esports environment becoming a lot more professional because it's able to offer far greater rewards. We also have the rise of a wider set of endorsement types that gaming companies as well as brands who want to leverage gaming can draw on.
South Africa's gaming scene is rapidly gaining momentum. Not only is it giving rise to a new breed of homegrown competitive gamers, it's also creating new careers and opportunities for local gamers and developers. Julie Shire, CGTN, Cape Town, South Africa.
All right, then, quick update on a currency front. Just a quick update with data from Nigeria. Headline inflation over there slowing down in July, according to the data that came out today. Headline inflation numbers, 17.4%, down 40 basis points compared to June. Food inflation was an interesting one. That did slow down by around 80 basis points to around 21%. Food prices, of course, have been responsible for keeping that headline inflation number at multi-year highs for quite a while now. That's it for this edition of Global Business Africa. To remember, we'd like to hear your thoughts on the content you've seen here in the last hour. Also, many ways to get your thoughts back to us, all of them on your screens right now. I'm Ramah Nyang in the Kenyan capital, Nairobi. Thank you for your company in the last hour. The World Today is up next from Washington, D.C.